A successful VWAP, volume-weighted average price, strategy relies on the understanding that VWAP is the fair value of an asset for the day. While many traders use it as a simple line on a chart, the most effective approach treats it as a dynamic support/resistance level and a measure of market trend strength. Here is a step-by-step framework for a high-probability VWAP strategy. Phase 1. Identifying the market context. Before looking for a signal, you must determine if the market is trending or mean reverting. In a trending market, VWAP acts less like a magnet and more like a moving floor uptrend or moving ceiling downtrend. To trade this state effectively, you need to identify the separation between price and volume. 1. Identifying a strong trend state. A trend is officially established when the price maintains a distance from the VWAP without frequently crossing it. The slope. In a strong uptrend, the VWAP line will have a visible 45-degree angle. If the line is flat, the trend is not yet strong enough to trade pullbacks. Price separation. Watch for the price to ride the +1 standard deviation band. In a powerhouse trend, the price often stays between the +1 and +2 bands, rarely touching the actual VWAP line. Volume validation. Pullbacks toward the VWAP should occur on declining volume. This indicates that the selling is just profit-taking, not a trend reversal. When the price bounces off VWAP, volume should spike again. 2. High probability trending setups. Setup type. Description. Confirmation signal. The VWAP pinch. Price and a fast EMA, like the 9 or 21, pinch together right at the VWAP line. Look for a squeeze in price volatility, followed by a breakout candle. The first band ride. Price stays above the first upper STD dev band for 15+ minutes. Entry on a touch of the first band, rather than waiting for the VWAP itself. VWAP reclaim. Price briefly dips below VWAP but immediately closes back above it within 1 to 2 candles. This is a bear trap. Buy the close of the reclaim candle. 3. Using market confluence. A trending VWAP strategy is 2x more effective when you correlate it with a market leader, like SPY or QQQ. Bullish correlation. If your stock is pulling back to its VWAP, but the SPY is still trending higher at its own VWAP, the stock is highly likely to bounce. Relative strength. If the overall market SPY is flat, but your stock's VWAP is sloping upward, your stock has relative strength. These are the best trending candidates because they will explode higher the moment the SPY turns even slightly bullish. 4. Advanced exit strategy for trends. In a trending market, a fixed profit target often leaves money on the table. Instead, use a trailing VWAP stop. 1. Initial stop below the VWAP line. 2. Move to break even when the price hits the +2 standard deviation band. 3. Final exit. Close the position only when a 5-minute candle closes below the VWAP line. This allows you to ride a trend for hours during high momentum days. Note: if the price crosses the VWAP more than twice in a 30-minute window, the market has shifted from trending to ranging. Stop looking for dips and start looking for reversions. In a ranging market, the market consensus is undecided. Instead of treating VWAP as a floor, the market treats it as a magnet. This is known as mean reversion trading. In this state, the goal is to fade the moves that get too far away from the average price, betting that price will snap back to the VWAP. 1. Identifying the ranging state. You can identify a range by looking for these 3 signals. The flat line, the VWAP slope is near horizontal, 0 degrees to 10 degrees angle. The DNA pattern price crosses above and below the VWAP line repeatedly, looking like a double helix. Band expansion standard deviation bands are parallel and not widening aggressively. 2. The standard deviation fade strategy. In a range, The standard deviation (SD) bands become your primary entry and exit targets. Statistically, price stays within 2 standard deviations of the VWAP 95% of the time. Overextension. The setup. Wait for price to touch or pierce the upper second band for shorts or lower second band for longs. The rejection. The trigger. Do not enter just because it touched the band. Wait for a candle to close back inside the band. This proves the momentum has stalled. The target. Your primary target is always the VWAP line itself. The bonus run. If price reaches VWAP and volume remains low, you can hold half the position to see if it reaches the opposite second band. 3. Comparing market states. Feature. Trending state. Ranging state. VWAP roll. Dynamic support/resistance. Price magnet. Mean. Primary entry. Pullback to VWAP. Touch of second SD bands. Slope angle. Steep. 45 degrees plus. Flat. Horizontal. Ideal indicator. MACDADX. Trend strength. RSI. Stochastics. Overbought. 4. Risk management for ranging markets. Range trading carries a specific risk. The breakout. A range often ends with an explosive move that begins a new trend. The time stop. In a range, trades should happen quickly. If you enter at an SD band and price grinds sideways along the band for more than 4 to 5 candles without moving back toward VWAP, exit the trade. This grinding often precedes a breakout. The hard stop. Place your stop loss roughly 0.5 SD outside the band you traded. If price continues to the third SD band, the range is likely broken and you must exit immediately. Volume filter. If price reaches an SD band on massive volume spikes, do not fade it. High volume at the extremes usually signals a trend breakout, not a reversion. Summary checklist for ranging days. 1. Is VWAP flat? 2. Is price at the second standard deviation band? 3. Is the RSI showing an overbought oversold reading greater than 70 or less than 30? 4. Action. Fade back toward the VWAP magnet. Phase 2. The setup. The pullback and hold. This strategy works best during the first 90 minutes of the market session, when volume is highest. 1. Establish the trend. Price must break aggressively above VWAP on high relative volume. 2. The wait. Wait for price to pull back toward the VWAP line. 3. The confirmation. Look for a bullish reversal candle, like a hammer or an engulfing candle, that touches or comes within a few cents of VWAP without closing significantly below it. 4. Confluence. Check a secondary indicator to confirm strength. MACD histogram should be showing waning bearish momentum on the pullback. Relative strength. Ensure the asset is outperforming its benchmark, e.g., if trading a tech stock, ensure it is stronger than the QQQ. Phase 3. Execution. Step by step. Entry. Enter long once the high of the confirmation candle is broken. Stop loss. Place your stop slightly below the recent swing low or a close below the VWAP line, typically 0.10 to 0.20 below for mid-cap stocks. Take profit. Asterisk target 1, the previous high of the day. Target 2, the upper first or second standard deviation band, if your charting software includes them. Phase 4. Risk management rules. To ensure this works in any market, you must adhere to these mechanical exits. The 3:59 p.m. rule. If you are day trading, flatten all positions before the market close to avoid overnight gap risk. Break-even adjustments. Once price moves +1R, 1 times your initial risk in your favor, move your stop loss to the entry price. Break even. This protects your capital while letting the trade run. The slope filter. Avoid long trades if the VWAP slope is pointing downward, even if price is above it. A negative slope indicates the average price paid is decreasing. Pro tip: the failure trade. If price breaks below VWAP and attempts to reclaim it but fails, forming a lower high at the VWAP line, this is a powerful short signal. The VWAP then acts as a ceiling, indicating that institutional buyers are no longer supporting the price.